other big bank which will be reacting to its numbers and will probably help in terms of a cue for the markets as well as ICICI Bank. How did that perform?
Well, its ROA continued to remain robust or at all-time high of 2.38% on a quarterly basis. Business momentum is also very robust. Deposit growth is at 17.9% YOY and about 4.9% sequentially. The loan growth a bit lower than what analysts were working with, but no taking away the fact that, it remains robust at 18% YOY and about 3.7% sequentially. ROA, that's a key point to see. While for across other lenders, the ROA has decreased on a sequential basis. For ICICI Bank, it's remained flat and at record levels of 2.39%. Asset quality slippages are at 5,318 crore, while Morgan Stanley was estimating 5,500 crore. Seasonally, Q1 is weaker than Q4 in terms of asset quality for all the banks. Gross NPA ratio at 2.76% and net NPA ratio of 0.48% are perhaps the best or the lowest in last 33 quarters. The restructured book, that's also declined by 12.5% and forms just 0.37% of the loans, which is at a 10-quarter low. So P&L, both in terms of ANA and PAT, it's a beat on our poll. Back to you.
Okay, all right, Abhishek. Thanks very much for that. So definitely a good performance which is coming for ICICI Bank as well. Asutosh Mishra, who's the head of research institutional equity at Ashika Stockbroking, joins in with his take now. Ashutosh, hi, welcome to the show. Well, first, your thoughts in terms of ICICI Bank. What did you like in terms of the numbers, and what do you think would probably, where there is some room for improvement in terms of what they reported? Okay, I think you're on mute, Ashutosh. Yeah, go ahead.
Thank you. So if you look at a number of ICICI Bank, the deposit growth is the key highlight of the quarter, and that's what Abhishek was highlighting it. So they are preparing well for the upcoming busy season in the third and fourth quarter. So that will be the key things to watch out, how deposit cost for them pan out, because if the growth is quite high in this quarter, cost will start showing up probably from the next quarter. So NIMS has also slightly come down. So we would like to know more about the NIMS trajectory going forward from here. We are, given the industry, the way industry is getting momentum at this point of time, we are not worried about the growth part of it. Growth, surely ICICI Bank as well as Kotak will be able to deliver quite healthy growth in the coming period. In the case of the Kotak, we need to keep an eye on the mix of the growth, but no complaint from ICICI numbers. Numbers looks quite good on each and every parameter.
Well, Ashutosh, one of the key reading amongst the numbers is that despite decline in net interest margin for ICICI Bank on a sequential basis, the quarterly ROA at about 2.35 to 2.4% is maintained, which is a heartening point to see, right? Because other lenders, they are seeing decline in their ROA. The return ratio shows that, the profile of the business or the book actually has been strong for ICICI Bank. Is it the correct way to read?
Yes, it's correct way to read. When interest cost is slightly going up and impacting NIMs positively, at the same point, what we are seeing is that other costs, either in the terms of credit cost or in the terms of the OPEX, is quite soft for them, and which is really helping them to deliver the best-in-class ROA. And I think that will continue for the bank.
So you're not worried about the increase in slippages? Slippages generally for lenders, what we have seen is Q1 is seasonal in nature. Q1 does see a portfolio like agriculture or farm or tractors kind of a loan falling into NPS. This time around, retail is also coming up on the unsecured portfolio. But overall, the picture profile of asset quality of ICICI Bank remains robust, right?
Yes. So on asset quality, we don't have much to complain about it. Yes, there was a post-Bandhan Bank result. There was a concern in the industry about is that RBI is asking them to classify some of the restructured loan as an NPA out there. But I think that was one of the case where the probably regulator has indicated it there. Overall, there is no complaint as such on the asset quality front. Every first quarter, normally we see some increase in the slippages, which is there in this case. And given the latest lead indicator data, we don't see any major negative surprise coming on asset quality front in the subsequent 2 quarters at least from here.
All right, leave us with your view on Kotak.
So Kotak, I believe, very interesting to see the loan book mix. If you see this quarter growth is mainly coming out from MFI and credit card incremental growth. If you look forward, so they are changing the loan book mix out there, and that's what is helping them to deliver relatively higher NIMs. Yes, if you look at the deposit growth, this was also Kotak was forced to also do this because they were lagging on the deposit front compared to many other banks, and given the traction they are witnessing on many other on a growth front, they need to raise the deposit out there, and that will start getting reflected in the fourth quarter result. If I compare between ICICI and Kotak result, I will be giving much better marks to the ICICI compared to the Kotak.
Ashutosh, you mentioned about deposit growth. Now, what's heartening to see is take a look at the deposit growth of ICICI Bank at 4.9% on a sequential basis, Kotak Mahindra Bank at 6.4%. Now, this compares to about 1.6% quarter-on-quarter deposit growth for HDFC Bank. So, are they taking away the market share, or making hay while the sun shining part is that, HDFC Bank is busy with the consolidation of HDFC Limited?
I think second argument which you give that we need to wait out for this because on a branch and other expenses, HDFC Bank is doing much greater work out there. Probably because of the integration related things, we may see some lag on that front. But going ahead, I expect HDFC banks to maintain its market share given the way they are expanding their branch network, which is a very important thing in the deposit mobilization front.
Okay, all right, Ashutosh, we're going to leave it on that note.